Love music, love life. You are listening to Business Express on Smooth 98.1. It's 32 minutes past 6 o'clock, and it's time for us to talk not just about business, the numbers, but the implication for your pocket and your future decisions and the decisions right now, and how you can just be on the safe side with the information that will be provided, not by me, but by our expert and analyst in the house. Of course, you can always be part of the conversation by sending your messages, any quick question that you have to WhatsApp, and that will be 0911 999 0981. You can also join us live on YouTube, where you can see my face and the face of our guest. That will be at Smooth 981 FM Lagos, at Smooth 981 FM Lagos. That said, we are talking about Nigerians' foreign Forex reserves rising to record high $41 billion. And that sounds really good, but what are the implications? And to talk about this, what it means for the economy and Nigeria as a whole, is an economic analyst as well as entrepreneur and the founder of Nourish Box. Good morning, Gbemi Alonge.
Good morning. Thanks for having me.
It's a pleasure. Thank you for coming on. And let's get right into it, starting with what exactly foreign reserves are, why they're so important to a country, and what does it mean when we say it's rising or it's falling. So let's start with why they're so important.
So foreign reserves, a good way to think about them is like foreign reserves are like the savings of a country, right? And why do people save? People save for the rainy day. They save to protect themselves. So typically as an individual, right, you save in case there's an emergency bill that you have to meet, and also to just meet certain expectations or obligations, right? So foreign, and just the same way for the country, right? Foreign reserves are very important because they help the country to meet its near-term obligations. For example, if we needed to import and there were no forex, there was no dollars in the rest of the country, Bird chain don't have dollars or banks don't have dollars, the CBN would have to step in and provide that. Also, to meet obligations for the country, right? So debt obligations, to pay back our loans, to pay back interest and all of that. But most importantly, our foreign reserves are important to protect the value of the naira, right? So what does that mean? In the event where, where there's something called speculation in markets, right? Where people buy currency to increase, they sell currency to reduce its value, they buy to increase its value. So for example, if you hear that Nigeria is about to run out of dollars, right? And we saw this in between 2020 and around 2023 or 2024, in some cases where, because of the fear that we were going to run out of foreign currency, there were even rumors that people who had foreign accounts, if they needed to go and get their money out of their accounts, they'll be giving naira instead of dollars, right? So there was all that fear. So people started to buy the dollar way more than the naira, and that caused a significant depreciation of our currency. Everyone knew that the exchange rate went up. That's essentially why the exchange rate basically went haywire the way it did. Now, what we've seen in the last few months, in the last 6 months, for example, the exchange rate has remained within the 1,500 range, right? And it's been pretty stable. That is what foreign reserves do for you. They ensure that, because there's that posture, right? When you show that your reserves are high, people know that there's no fear, in quotes, right? Because if we need our dollars, we can get it, because the CBN has essentially a sufficient bank of dollars or sufficient bank of foreign reserves. So that's essentially, and that's another importance of the foreign reserve, the posture, right? What does it do for you beyond what you actually need it for, to meet your debt obligations and imports and all that? It also signals to investors that if you bring your money in, because the CBN has this much available, you can always take your money out. So that's essentially why foreign reserves are important.
Thank you for the explanation. Let's talk about how it rose up to $41 billion. And I hear, according to the report, that that will be about 4 years or 44 months high.
Yes, yes, since December 2021. So it's been rising significantly. And what that means, and why has it risen? Different reasons, but I'd say the most important is increased investor confidence, right? So we've seen investors basically return to the Nigerian market either through the bond market or through um, the capital markets, right? So we've seen the capital markets improve significantly in the last couple of months. We've also seen bond issuance basically improve, especially from foreign investors. And also our oil prices have increased. Now, the thing about the bond markets is in the last, since 2020, right? Despite the fact that, or around 2020, 2023, despite the fact that inflation was high, the foreign the interest rates, the monetary policy rates did not increase to match that inflation increase. So what that meant was people who were investing in Nigerian instruments, financial instruments like treasury bills and bonds, were basically buying it at less than they were basically losing money, right? So it was a negative real return for their investments. Now, what we've seen is a return. So the increased investor confidence is largely because the Nigerian financial market is more stable, more predictable, more and that's really what investors need more than anything. Like beyond wanting a high return for their investments, they want stability and predictability in the market. They want to know that if I bring in my $1 million, I can take it out whenever I need, and I can take it out at this rate of return that you have promised me. I can predict what the rate of return will be. Now, because the central bank and the Monetary Policy Committee have been increasing rates and basically maintaining rates at the in tandem with how inflation is going, right? Investors can now predict what's going to happen, and as a result, they are even beyond that. They are also getting, higher returns for their investments. Their real returns are now positive because the interest rates are typically in tandem with inflation rates. Now, beyond another thing that we've seen, and that has basically made them more comfortable to come into the markets. Around 2020, there are times when we saw airlines basically stop operations in Nigeria, like Emirates, because they couldn't repatriate their funds to their country, right? So I've made this much money in your country. I want to return it to my parents' country, but I can't because, there are either no dollars or the CBN had told people to be patient to take out their money in an orderly fashion. Now, unlike then, because you can see that the CBN's reserves are quite are much higher than they were before. There's that predictability that when I need to take my money out, I'll take my money out. And that would encourage airlines, for example, to continue operations. It would encourage also investors, portfolio investors who invest in like securities to also invest. Another thing that we've seen is increased oil production, crude oil production. Now that's so important for Nigeria because one thing that it does is it allows for increased foreign exchange inflows from the crude oil sales, right? But it also signals to investors again that, okay, if you're improving your crude oil production, especially now that you're not paying petrol subsidies, it means that you'll be earning a significant sum consistently and continuously over a period, right? Now, the increase is not as high as the budgets. The production is still around 1.6 million barrels per day. Is lower than the budget benchmark, which is around 2 million barrels per day. And it's also, I mean, the price is also lower. I mean, in the budget, the price is around $75 per barrel. And we're still doing around the range of like the high 60s and low 70s, right? So there's still that gap when it comes to budget, but that's besides the point. All production has improved. People can see, investors can see that, the country has consistently been earning foreign exchange from oil, crude oil production and crude oil sales, right? Another thing is we've obviously our trade surplus. We've been earning significantly more from exports than we've been spending on imports. That has also helped. So it's a combination of increased inflows into the country, and that's largely because of the stability and predictability of the financial system.
In other words, for us to make sure that our foreign reserves keep growing, we just need to do more of what we've been doing.
Exactly.
I
Exactly.
see. And since you mentioned the oil barrel production and the likes, now that Donald Trump wants lower oil prices, what does that mean for us?
I mean, so I think for his push for lower oil prices were largely due to the volatility in the Middle East, right? So when there is volatility by the main producers, the world's largest producers of oil, that's largely to, I mean, one of the ways that such producers will sort of force the hand of the rest of the world is by tweaking, by affecting oil prices. Now, if countries in the Middle East decide to reduce production or even stop production, that's going to affect the rest of the world because oil prices will increase. That means cost of production would increase, cost of transportation would increase. It just increases everything, right? The ripple effect is very massive and its significance for the rest of the world. So that was his own push. Now, I think beyond what we're even seeing from OPEC Plus in the last couple of days is that they've been pushing for more production from their own end. And more production means either reduced prices or a stability in the prices. And why they've been pushing for more production is so that they can basically earn more market share in the oil markets and continue to control the oil markets. If they lose their um, market share, they won't be as influential as they used to be. So I don't think that we have anything to worry about with his push for all prices to reduce because at the moment it's not enough to significantly crash the prices. The most I would see is that it would not increase significantly regardless of the volatility amongst like its largest producers, whether it's Russia or in the Middle East. So it's nothing, but I don't think that there's any cause for alarm right now. I think for the most part, it would probably still stay within the $60 to $70 per barrel. It wouldn't reduce to like 50s or 40s or 30s, nothing that dramatic. At least there's no signal, there's nothing that signals that it would reduce significantly like that in the near future. So we still have nothing to worry about for now.
I'll take you up on that and I'll say if you had words for investors right now, considering all that's going on, what would you say?
I'd say, I mean, Nigeria is doing especially the monetary policy authorities, they're doing what they can. They're doing a lot to sort of restore investor confidence. And the market is pretty predictable for the most part. However, Nigeria's foreign reserves still have a long way to go, right? So at the moment, while our foreign reserves gross is about $41 billion, net position is still, I mean, for the last released number was around $23 billion. Now, usually the rule of thumb when thinking about foreign reserves is that it should be sufficient for at least 3 to 6 months of your imports. Now, imports in the last 6 months are around like $20 billion or around 20 to 21 billion. If our net reserves are 23 billion and imports are 20 billion. It's pretty close. It's still pretty close. I mean, but we're coming from a place where around the end of 2023, net foreign exchange reserves was around like $4 billion, right? So we're coming from $4 billion in 2023 to around $23 billion in at the end of 2024. And now, although the net position hasn't been released, it should be around like 23 to $25 billion. It's still, given the size of the economy, there's still a lot to be done, right? In a country like Nigeria, with size of its imports, should at least have more than enough, right? But the rule of thumb is your foreign reserves should, at least your net foreign reserves should be enough to meet your near-term obligations. Another thing that I forgot to mention is one of the reasons why our foreign reserves have been increasing is because our obligations have reduced, right? So for the most part last year, the central bank and the fiscal authorities did a lot to sort of repay back a lot of its loan. One of the things that the federal government celebrated this year was, the repayment of the IMF loan. So there was a lot of like repayments, and that meant that Nigeria was under less pressure by its creditors. So just that, and again, that signals to positioning, right? When people, loans and debt is not bad in itself. What is bad is your inability to repay back loans, right? So you hear of people who, despite owing banks significant some billions of naira, they're still able to take loans from banks compared to people who, owe banks, say, hundreds of thousands and are unable to borrow more because their position just means that they're not able to, if they're not able to pay back when it's due, right? So that's what we need to signal to the rest of the world, and I think that that's what the financial system is doing. I think if I was to tell investors anything, Nigeria seems to be doing the right things, especially the financial system. There's still concerns, especially about one of the things that we've been saying is an increase in portfolio investments and foreign direct investments, which is more stable, which is more long term, has not increased in the proportion that we've seen the portfolio investments increase. Now, portfolio investors are people that invest in capital markets, invest in money market instruments. If portfolio investors should decide to take their money out, they can take their money out in a day. They can take their money out in a week. Whereas if someone built a factory, they cannot exit in one day. It requires, even if they decide to exit today, it will still take them about a year to sell off their assets and to basically move things around. Whereas portfolio investors can basically move out. So what we need to do, and to improve for foreign direct investment into the country, we need to signal that Nigeria is ready to do business, security is better, electricity is better. Those are the kind of things, and those are the things that affect you and I as well. So as long as there's more that as while the government is doing enough, the monetary policy, the monetary authorities are doing enough to allow for an inflow of capital into the market. What we need to see more is more long-term, more sustainable investments, which is foreign direct investment, building factories, creating jobs, those kind of things.
Thank you for the extensive analysis and for your time this morning. Fortunately, we're out of time, but I'll quickly take one message from Tayo from Aja, who says, besides investor confidence, federal government of Nigeria needs to promote local business for local production and exports to close in on the margin between other currency. I hope the CBN governor can sustain this drive because Naira is losing to CFA and cedis. I mean, look at the situation, or see this. Nice fun, Tayo. Nice fun. Thank you, Gbemi. And
Thanks,
what's
Phil.
your socials or your handles on socials in case people want to follow you?
Gbemi Alonge everywhere.
All right. Thank you again. And you can find this on YouTube at Smooth 981 FM Lagos, at Smooth 981 FM Lagos. You just go search for it and you'll see hashtag Business Express 981 with the title being about how we have increased our foreign reserves to $41 billion. And thank you for being a part of Smooth Breakfast Business Express this morning. It continues because 7:30 will be time for Freshly Pressed, and that will be for us to get into the in-depth analysis of some of the top headlines from Nigerian dailies. Thank you.
Thanks, Cheryl.
I will share this with Rotu so that he can share it with you.
All right. I have your number, so I'll probably also just message you in case you want to send directly. Thank you. I hope I didn't. I feel like at some point I was just going on and on.
Well, will you be joining us on Wednesday, or it will